So as we've heard, latest forecasts for growth are down, and George Osborne says Britain faces a turbulent global economic environment. Our economics correspondent, Andy Verity, has been crunching the numbers, and he's here now. Andy.
Thank you very much, George. Well, the Chancellor's been preparing us for bad news since at least January, when he talked about his dangerous cocktail of risks to the economy, and he repeated that phrase today. But what we found out was that some of those risks aren't just out there in the rest of the world, they're happening here.
Start with a cooling global economy. Add some turbulent financial markets. Chuck in a slump in oil prices. All the ingredients you need to make the world economy go a little wobbly. But as we imbibe its effects, we're slowing down too. The Office for Budget Responsibility now thinks we'll be producing far less per person than it had hoped as recently as November. The OBR slashed its prediction for economic growth this year from 2.4% to 2.0%, largely because of that slower productivity.
If that's not going up as fast as hoped, then earnings aren't going to go up as fast as hoped, the economy isn't going to grow as fast, tax revenues aren't going to come in. That's the big change, and actually that's the thing we ought to be talking about more than anything else, actually, because it really, really matters, not just for the Chancellor, but for how well off all of us are.
Slower growth should mean less tax money for the Chancellor, but somehow, say the official predictions, he's still on course. He'll still be spending more than his income, in other words, running a deficit until 2019. But that won't reduce as quickly until the final year, when it suddenly turns into a surplus of £10.4 billion. Now that's a huge swing in the last year of the Parliament of £32 billion. And what's more, he's somehow found the money for some big tax giveaways like the lifetime ISAs and freezing fuel duty. Raising tax thresholds from next year, except in Scotland, will cost him £2.5 billion, and more relief from business rates for small businesses, that'll cost him £1.4 billion.
You see giveaways to begin with, and then takeaways in 2019-20 and the year after. Those are the years for which the government has a target to achieve a budget surplus. What's quite striking is that we really do have quite a big squeeze taking place in 2019-20 itself.
That big squeeze will mean big spending cuts, £3.5 billion in efficiency savings from government departments, but not until 2019-20, making public sector employers pay £2 billion more into pensions, but not until 2019-20, and making it harder to claim money for special equipment if you're disabled, saving £1.3 billion, but not until 2019-20.
Once it looked like austerity would be front-loaded with a feel-good effect later, but now it's been back-loaded, saving the big spending cuts and tax rises till the last year before the next election. Careful with cocktails, they can have a delayed effect. Andy Verity, BBC News.